Newedge USA from Mr. Top Step from the floor of the CME Group. We've had a little bit of news out that's caused the euro to rally a little bit, but we seem to be stalling up here. Over the weekend, we had the Greek election results. Not a bad result. Mostly they voted for the austerity package, so not as bad as it could have been. But we really haven't seen the kind of rally that I'd expect on that news. And actually, since that point, we've had nothing but bad news out of Europe. So, among other things, Spanish bond yields have gotten above 7%, not really a sustainable level. We had some French elections over the weekend, which aren't really getting as much play because the Greek elections had been the focus. But in the French elections, we had the Holland Socialist Party won. He's got a clear majority there. It's being viewed as sort of a positive for the markets only because he doesn't have to pander to the far left parties. But the fact of the matter is there's not going to be any objection now to his pushing through his policies. Everything should be clear sailing to get it through. And just this morning there was a story out of one of the French papers that they're planning on introducing a 3% withholding tax on corporate dividends, as well as a tax on financial transactions in their mini budget. So I think that's a little bit concerning for the euro area. On the technical side of things, we've seen the euro rally up to this 127.50 area on the top side from the lows down at 122.80, but we seem to be stalling here. Some of the data coming out of Europe now seems to be a little bit bearish for the euro as well, so I'm looking for lower prices. Specifically, we had the ZEW economic sentiment numbers out this morning. It was really a horrendous number. The market was looking for a plus 2.3. It came in at down 16.9. It was the fastest rate of decline since 1998. Add to that, we've got the market now pricing in about 50% priced in for a 25 basis point cut out of the ECB at their next meeting. So I think what we're looking for here is a situation where we want to sell rallies in the euro, try to get some position on the trade down, looking for eventual new lows through 122.80. The second currency I'll talk about is the Aussie. We talked about it last week a little bit. I'm still pretty bullish on the Aussie, and it's had a really nice trade up. We made a low in June down at 95.81, and we're really just off the highs for the move today, up around this 101.70 area. I think we're looking for a topside stretch of about 104.75. So for the topside stretch, that means if we get up there in fairly short order, so I would say over the next week, that those should probably be the tops. We'll see some stops above 104.75, maybe some stops above 105 if we can make it up there. But really, that should be the extension for the rally for the near term. So if you're long, you want to hold on until we get up there and maybe lighten up as we get up there. But you probably don't want to be buying up in that 104.75, 105 area. For MrTopStep.com, I'm George Dowd from Newedge USA from the floor of the CME Group.